Hello boys and girls, and welcome to this video. In this video I will show you how I use the software to create my strategies. I've been using the software to create many strategies before, like the ones that I use in Gold Trade Pro, Gold Reaper, Day Trade Pro, Indicement, etc. The idea is that you can see how I do it, so you can be successful in creating your own strategies. You can simply copy what I do in this video, but the idea is that you think a bit about what I'm doing, so you can make maybe your own adjustments to how you set up the strategy tester, the parameters, etc. So that you can make more unique strategies instead of simply copying mine. And one more important thing before we continue is that I really recommend reading the manual that I made. It's fully detailed with all the explanation for all the parameters. I really recommend reading it so you understand more of what's happening in this video. And now, without any further ado, let's go and make some strategies. All right, so first things first, we need the MT5 terminal to make the optimizations. I always use, or not always, but I usually use a MetaQuotes demo account, which you can see here, for making optimizations for most Forex pairs. So basically all the Forex pairs and also gold, I use MetaQuotes demo. Why? Because their quality of historical data is actually quite good. Of course, afterwards, when I made the strategies, I will also run some tests on other brokers with other price feeds, just to make sure that there's nothing strange happening in other backtests with other brokers. But for the most part, I will be using MetaQuotes demo account. For some other pairs, like for example Bitcoin or for the indices, I use the IC Markets account because IC Markets seems to have better data, better historical data for those kind of pairs. All right, the next step is we're going to check out the strategy tester and see which settings that I use to do the optimizations. Let's make this a bit bigger maybe. So of course the expert you have to select is the ultimate breakout system EA, because else you won't be making any optimizations for the system. For this example we're going to use gold, which is actually a very good pair for making breakout strategies. So we're going to have symbol gold. Daily time frame for this example as well, because daily time frame will be faster for doing the optimizations and is also more reliable, in my opinion, for strategy like breakout strategy. I'm going to use a custom period 2013 until 2023, end of 2023. Why? This is a good 10-year or 11-year period for running the in-sample optimizations, and we still have enough data outside of this period to do some stress testing after we've done the optimizations to see if the strategy actually works in out-of-sample data. For example, for gold, we will find data from 2004 till 2013 to do some out-of-sample data before this period, and even afterwards, the recent months, 2024 and 2025, which will be important to check if the strategy is still running valid in that period. Next, forward testing, no, because we're going to do it manually afterwards. Delays, we don't use that as well. I have found that using delays in a strategy like this, where we use pending orders for entry, doesn't really make it more reliable, doesn't make it better. As for modeling quality, we're going to use 1 minute open, high, low, close candles, because this is much faster than every tick. And my idea is that we first make a bunch of strategies, like rough strategies that we will test, and then we're going to do some every tick testing afterwards to make sure that the strategy isn't too sensitive to spread or slippage. So we're going to do some every tick back testing, but afterwards, after we made a bunch of strategies. A deposit, just take a big one, like 100K, take a big leverage, because we don't want to have any influence of the leverage on our optimizations. Then the optimization process itself, just use fast genetic-based algorithm, because using the slow complete algorithm will take such a long time, and it doesn't really add any value in this process. And then this last selection box, we can select the criteria for the optimization process. I've made a detailed explanation of what these things mean in the manual. So I'm not going to go all into detail here. Just read it in the manual, please. What I'm going to say is, for this example, we're going to use the custom max, which basically uses multiple criteria for selecting the best strategies. All right, so the first few parameters, these ones, they're not important for the optimization process, because they basically will allow you to show the info panel during backtesting, yes or no. The next ones are the custom optimization settings, these are the ones that I pinpointed here. So when you use an optimization using the custom max, the optimization process will look at these three to select as selection criteria for selecting strategies or not for future optimization. So what exactly they mean, expected payoff means basically the average profit per trade. The recovery factor is like a risk-reward thing, so strategies with good risk-reward will be higher ranked than with bad risk-reward. And the number of trades, to me, is also important because we don't want to run an optimization and have strategies based on 50 trades. We need at least a couple hundred trades to make it sure that it's not an over-optimization on those trades. Then the next one, spread filter. I don't use it during optimization either because I think we want robust strategies, which basically means they should be able to handle a wide range of spread during the process. Afterwards, especially for scalper strategies, I might go back to the spread filter and see if the strategy improves when I apply a spread filter. Next, the other filters. These are also not important for optimization as they are more things broker related. For example, set stop loss after entry means that after the pending order is triggered, then the stop loss and take profit will be added to the trade. Why? Some brokers don't allow stop loss or take profit to be added to a pending order. Same for virtual expiration, etc. Again, in the manual, these are all explained in detail. I would recommend reading them when you have interest in those. Now, these are a bit more important, the variable value settings. I introduced these into the EA because for some markets like gold, indices, Bitcoin, for example, these markets tend to grow over time, which means gold at one time was like around 1,000, the value of gold, and now it's around 3,000. It basically also means that the moves that gold makes are related to the value of the price. So when gold was 1,000, the average move a day was maybe like 100 pips. But now at 3,000, it's almost 3 times more. It's 3 times as big, the moves. So we want our values, our stop loss values, take profit values, entry values to automatically adjust to the actual price of gold. And that you can do with these values. Okay, so then next, the trade entry management. These are basically the parameters that will determine where you will put the pending orders for the breakout. I'll explain in the manual what exactly these parameters mean. These are the ones we're going to optimize for sure, or at least a bunch of them, maybe not all of them in the beginning. Then next, trade exit settings is where we're going to take our loss or a profit, preferably profit, of course, like the stop loss, take profit. Also here below is a trailing stop loss management, the trailing take profit management, break-even settings. All of these are explained in the manual, so I'm not going to go into detail here. A different kind of trailing stop loss here as well, based on recent support and resistance level. A trailing stop loss based on time. And a magic trail, which is a very nice word for a very aggressive trailing stop loss, which is useful in scalping strategies, not so much in swing strategies. Then next, the lot size settings. You don't need to do any optimization for this, of course. I always prefer doing a fixed lot size, using a fixed lot size for doing optimizations. Why? Because that way you can easily compare the strategies when you put them next to each other, because the growth curve is not an exponential curve, but you can see more a stable growth curve or not a stable growth curve if you didn't do good optimization. So we're just going to keep manual lot size 0.01 for most forex pairs. For indices, it's probably like 0.1 or 1 lot you have to use. GMT settings, etc. Not important for the backtesting, for the optimization, sorry. NFP filter, interest rate filter, CPI filters. I don't see the use during the optimization process, but afterwards we're going to, of course, check if we can make an improvement to a strategy by using these kind of filters. Same for trading hours, unless you have in mind a certain idea of a trading strategy that is going to trade only during certain times. I haven't used these during the optimization process so far. All right, so we had a quick overview of the parameters. Now, the most important thing now will be, of course, which values are we going to use for the optimization process. The good news is I made some nice set files for you to use that you can simply load into these parameters, and they will have all the values set already to make some nice strategies. Of course, again, by simply copying what I do, you will probably end up with a lot of strategies that look like mine. And the idea is, of course, that you make your own unique strategies. So instead of simply copy-paste what I do, in the beginning you can do, but afterwards I think it's important that you understand what these parameters mean and that you think a bit about, for example, entry. Where do I want my entry to be if you have a certain strategy in mind, and manually set these values yourself. Now for this example of the optimization that I'm doing, I'm just going to select one of the optimization set files that I've included with the purchase of the EA. So in this case, one for gold, and the one that we're going to use is one that I used for doing the optimizations for gold bot 1. So you simply go to the zip file that I included, and you go to the gold bot 1, and there's an optimization set file. We load it here into the parameters, and it will fill in all the values that I used. You can see here, it's already like check marked, all the parameters that were used for the initial optimization, and also the values for start, step, and stop are all filled in. So this will make it easy to just start the optimization and make your own first strategies. And now comes the easy part. Now we're just going to click start, and it will start the optimization process. Maybe one thing important, what I do is, the way you can run the optimization process is by either using your own computer, which is this one, which works well, but it's just a bit slow, too slow for my opinion, not too slow for my taste. I always use the MQL5 Cloud Network. Now, it isn't free. It will use some of your MQL5 wallet, your money, but it goes a lot faster. So also for this example, I'm just going to use the MQL5 Cloud Network. Depending on the strategy and the optimization process that you're doing, it will cost you almost nothing or a bit more if you are, for example, trying to optimize using an every tick, which is again why I don't use the every tick, because then it really starts adding up the cost price for using the MQL5 Cloud for optimizations. So in this case, just 1 minute open, high, low, close for optimization, and I use the MQL5 Cloud Network. We click start, and now it's time for coffee, because it might take a while. It might take a while. All right, quick intermezzo while the optimization is running. So in the optimization results tab, we can already see the optimizations being created, the strategies being created by the optimization process, and we can fairly quickly see if our parameter selection and our values for the optimization were any good, because if you see after 10 minutes there is nothing of a good strategy coming out, it's best to restart the optimization with different values, with a different setup. We can also already start to rank a bit and see if there's anything that looks decent. For example, what I like to look at is recovery factor is one of my favorites. So if you rank by recovery factor, anything like this, 17 is a very good value. Even though it might look like the profit is not much, a good recovery factor basically means that this profit was been done with a very low drawdown. So we will see after the optimization process is done, we will actually run a back test on these strategies to see how they look. But I, from experience, know this one will not be bad, this one will not be bad. We can also rank on a different parameter, for example, expected payoff. So the ones with a high payoff basically means you don't need a lot of trades to make profits, but like this, for example, three trades, very high profit per trade on average, but 3 trades is for sure not enough to be a valid strategy on a period of 11 years. No one wants to wait 11 years for 3 trades, I think. So usually I rank on profit to see, and then I check, okay, this is 387 trades, that's nice. Recovery factor 9, okay, so probably one of these I will just run the back test on these strategies once the optimization process is done. And then I will save the strategies that look like they have potential, and afterwards we do some more work on those. All right, so the optimization process has finished now. I already did a ranking made based on the recovery factor for you. So that is my first criteria that I will use to select some strategies. Let's first of all just select one that looks good, like this one. It has enough trades, 400, nice profit, good recovery factor. So let's simply run 2013, 2023, which is the in sample period. Let's see what gives with this strategy. All right. So we can see the optimization period is running very smooth, and this is a very stable growth curve. There's not much spikes with equity down as well, which means that your stop loss is nicely in line with your take profit levels. After this test, we will see if the out of sample test will be in line with the in sample test, which is basically the most important thing. And then we will also check with some every tick testing to see if the strategy is not too sensitive to a spread or slippage. So this is the inline in sample test. Now let's do an out sample test. 24 to 25. So this is completely out of sample. All right, not so many trades from what I can see, but it's still profitable. Not making me very exciting yet. Let's see the out of sample testing in the early period, which means 2004 till 2012. You can see with using the 1 minute open high low close candle, backtesting goes quite fast. So you can do a lot of things in a short period of time, make a lot of strategies, test a lot of strategies. And in the end, we do the every tick testing just to validate their performance. Of course, for scalping strategies, you need to use the every tick during the optimization process. There's no other way around, because running the 1 minute open high low close with scalping, you're going to get perfect growth curves during the optimization and backtesting, but it won't look like that when doing real live runs with those strategies. So anyway, this out of sample test looks very nice. It gives me confidence in the strategy. The final test I need to do is run a every tick test for a short period of time, just to compare with the 1 minute open high low close test to see if the strategy is not too sensitive to spread and slippage. So let's do this. This will go a bit slower, so I'll come back when this is finished. All right, so the every tick testing is finished for this strategy. It's a result of 48 instead of 90 something. To make it easy, I already saved both so we can compare. So this one is the every tick. No, this is the 1 minute open high low close testing, which has a profit of 93. This 48. It shouldn't be, it doesn't have to be exactly the same. It should be in the same, the growth curve should look the same. So in this case, you can see the growth curves does look quite the same. It's not one of the better results that I've seen, but I'll save it anyway for further processing. So this is, to me, a valid strategy to look into. So I'm going to just save it. Save. Put it somewhere in a folder. Let's call it set A. And then we're going to run another one. For example, the one above, because it would have the number of trades. So it should be a bit different in growth. Let's set the dates again. 1 minute open high low close. 2013, 2023. And let's run the in-sample test. All right, so I skipped to the end of the test to make it a bit faster. So this is the second strategy we're testing in sample. Looks very good. So we're going to do some out of sample testing. First, 2024, 2025. This looks more stable than the first strategy we did. So let's just quickly do a real tick testing, because this looks good. To 18. Every tick, same period, just to see if the strategy is stable, is robust, basically. You don't have to wait till the end. I'm going to skip this part. All right, so here we have the real ticks test of that strategy. And it does look very good indeed. So this one looks like a keeper. I'm just going to do the out of sample from 2004 till 2000. 12 just to confirm, but I have no doubts, to be honest. As I thought, this is profitable as well, so it looks like a very robust strategy. So we're going to save this as well. This will become B. Save. Strategy number B. All right, we'll do one more. All right, so we're going to select another one, and for this last one, I'm just going to do a different ranking, for example, on profits instead of recovery factor, just in the hope that the parameters are a bit different, so we have a bit of a more uncorrelated strategy than the others. Let's take one also with a higher stop loss, for example, this one. Yep. So first in sample 2013, 2023. And I'm going to use this one. So that's a nice number of trades. Recovery factor is a little bit lower than the other two that we did, but 10 is still, 11 is still quite a high number. So let's just run and see what it gives. As you can see, with using the 1 minute open, high, low, close quality of running things, everything goes quite fast. So you can select, analyze a lot of strategies in a short period of time. And only in the end, when we want to confirm if the strategy is robust, we do the every tick testing with using the highest quality of data. So this one looks actually very good. Yeah, it's done. So now let's check the out of sample first, 2024, 2025. Right, perfect in line with the back test, with the in-sample test, so that is very good. 2004 till 2012. Let's do this one. So the process is quite easy. You do an in-sample optimization, then you confirm with the out-of-sample data. You recheck out-of-sample data a short period with every tick just to see if the strategy is robust, not too dependent on the spread and slippage. And then you save it for further analysis afterwards. That's just the initial selection of strategies. All right, so this out-of-sample test also is very good. So the final thing we needed to do was the tick data test 2024 till 2025. Real ticks, start. So you just catch the finishing of the test. This is the tick data test, and it looks very stable for this period, which was 2024, 2025, 365 profit. Let's quickly compare with the 1 minute open, high, low, close, but I'm pretty sure it looks quite similar. So that would be this test. 405, and the graph is, I mean, both look very good. So as well as the previous two, this one will be selected for further processing, and this will become C. All right. Okay, so now we have already 3 strategies that we found in a bit over an hour of time. Just the optimization process obviously takes the longest time. And after that, we want to try to find a few strategies quite quickly using in-sample, out-of-sample data, and using a tick data backtest to confirm that they're robust. The next step will be that we're going to fine-tune these strategies and see if we can make them more stable for the long term. But first, we're going to select one strategy for this video's purpose, the best one of the ones that we made so far, and we'll be working on that strategy alone. I'm not going to do all 3 at this moment. So I opened Quant Analyzer, which is a free software that you can use to upload your backtest into. I also did the full backtest from 2004 till 2025 for all 3 strategies that we found, and I uploaded them into Analyzer, the Quant Analyzer. So here you can see strategy A, B, and C that we did. This is strategy A. You can see the growth curve here. Strategy B, and strategy C. You can already see that despite just one optimization process, the growth curve of all three is not identical, so they're not 100% either. They're not so correlated, to be honest. And we can even see that if we would make a portfolio just of these three without doing any further optimizations, and we make a portfolio, we already have quite a stable growth curve, which is more stable than an individual one. Because if you look at everything, you can see these are the three individual strategies, and this is the sum of all three. This is by far the most stable growth curve. So even with this simple process that I did so far, we already have three strategies that can run together in one account and give you good performance, basically. So what we're going to do now is find the best one of the three, which will be mostly done visually. I just like to simply look at the growth curve. Also look a bit at return versus drawdown. So we can see that strategy B and C have the best numbers for return versus drawdown. And I think we can agree that strategy C looks the most stable. And by stable, I mean if you would put a line, it runs parallel to the line the most of the time. So I'm going to use strategy C for further development. Okay, so back to the MT5 tester. What we're going to do now is first make sure we're working on the correct strategy. So we load back strategy C, which we saved here. First, let's do a full backtest so you can see how the strategy looks in the backtester. All right, so I already did the backtest. This is the result. This is 2004 till 2025, so basically the whole period of gold. You can see this is quite a very stable growth curve, and even in the end we have like a very nice uptick out of sample. This is out of sample, so this really shows that the strategy has a lot of potential for running live. So what we're going to do next is see if we can find some parameters that we haven't optimized or existing parameters that we did optimize, and maybe we can find some better values. For the purpose of this video, I'm going to select an easy one. For example, I'm going to re-optimize the stop loss and the take profit. When you do these extra optimizations to try to find a better, more stable strategy, it's important that you don't re-optimize too many parameters at once. Just maybe one, maximum two. I wouldn't do three or more because you'll mess up basically the initial optimization you did and you get a new strategy instead of the one that you found. So for this process, for the video, we're going to just do the initial stop loss and take profit. And before we do that, we first have to deactivate all the other ones that we don't want to optimize again, which means all the entry parameters. I'm going to keep them the same. This one as well. All right, let me double check. Stop loss only, take profit. All right. Since it's only two parameters and we want to have all the values now, not the genetic based one, which would skip a lot of values for each parameter. So now we're going to do a slow complete one. This one doesn't really matter now, so we're going to use balance max. Period, we can use the same as the original in sample period. Or maybe let's make it until 25 because it's not so important anymore. We already have like a valid strategy but in and out of sample, so we're going to just use this period now. So complete, balance max, only the stop loss take profit. The values we can use the same. We know what our back test is now. All right, so we're going to run the back test now, the optimization process now. And see what gives. All right, so the optimization process of the stop loss and take profit has been ended. I have, let me check here, the original value was 1150 and 1300. So if we're gonna quickly find that, 1150 and 1300. So this was the original one from the original optimization. And we had a profit of 1523 with a recovery rate of 16. Now if we're gonna rank it by profit, so we're going to try to find a higher profit. Let's go all the way to the top. we can see 1650, so that is a bit higher, and even the recovery factor is a bit higher. So actually this is a better strategy already. Just the only thing that changed was this is the same. We have a bit of a higher take profit. So we're going to run a quick test on this one. Of course, the difference will be visually not so much noticeable because, I mean, it's a long term and you have a small percentage of higher profit and profit factor and recovery factor. But still, all little bits of improvements help eventually with creating a better strategy. All right, so this is the new one. I mean, it's hard to tell the difference from just looking at it, but since the numbers are better, I assume it's better. So the next thing I would do, but I'm not going to do every one in this video, is, for example, I would also do the trailing stop loss, only the trailing stop loss. After that, maybe the trailing take profit. Then maybe even the break-even settings, I would just optimize those separately. I might try the high-low trailing stop loss settings, which basically make a trailing stop based on the recent support and resistance levels. The values which are filled in are quite decent to use. The other ones I probably won't do. And then in the end, you can also check if enabling the NFP filter, IR filter, which is interest rate filter, news, and CPI filter, if they make a positive impact on the strategy or not. To be honest, with these filters, I would rather see if you put them on, it will have a little bit of negative impact regarding profits, but it's safer to use them in real life trading. So what I would do is check if you put the filters on, if the negative impact is not too much. So you want to keep as much of the original performance of the strategy without the filters when you turn them on. That's what I would do. All right, so what I've done now is just the small extra optimization that we did on the stop loss and take profit. Saved the results again and put it in the quant analyzer just to compare with the previous result. So this is the original C that we had, strategy C. This is the improved one. So as you can see, you won't notice so much difference in the growth curve, but you can see it is a bit more profitable. The profit factor is a little bit better. The drawdown was a little bit more, but still return versus drawdown actually improved overall a little bit. Average profit, average win increased a little bit. So we improved the strategy a little bit, and this fine-tuning is basically the last thing I do. Now we did stop loss take profit. You can do some other parameters as well. You can work on the entry parameters as well, just until you find a strategy that you feel comfortable with applying to a live account. All right, and that is a bit the full process of how I use this ultimate breakout system to create my own strategies. Some afterthoughts maybe. If you don't find strategies the first time you run optimizations, there is some things you can do. First of all, you can rerun an optimization using some different setup for the parameters, some different values, a different time period that you want to run the parameters. Some markets might not be ideal for breakout strategies as well. So what I would recommend is try to run some optimizations on different markets. Don't try to run on markets that don't have good historical data, because you need a bit of data to make valid strategies. What you can also do is try to run strategies or try to create strategies on different time frames. From experience, I know the daily time frame must be the best, or is the best time frame for making swing strategies. The lower you go in the time frame, the more it will become a scalping strategy, and the more it will become dependent on the spread and the slippage of the actual live trading conditions. And as some final words, I would like to say, go ahead, try to find your own strategies. If you have difficulties finding strategies or difficulties understanding everything that is going on with the program, with the parameters and everything, just let me know in the private message on MQL5. I am always fast to reply, and I'm always there to help you be successful with using this EA. Other than that, I hope you enjoyed this video, and I hope you create some valid strategies that you can use on your live accounts very fast. Thank you.